Boom. We are alive, ladies and gentlemen. It looks like we are just finishing our automatic rally after a Bitcoin's nice little run up to 50 grand. We saw a little bit of strength coming out of the rest of the ecosystem too. It's always nice to see these automatic rallies. Everyone gets super excited and thinks we're running to a new all-time high right away. Although we are probably going to likely see one or two more quick secondary tests before we actually drop down. So we're going to start by taking a look at Bitcoin for the calmest market sentiment you've seen today, I'm sure. Boom, there she is. Bitcoin on the 6 hour. As you can see, for those of you that have been studying, we have a nice trading range separated into almost 4 equal parts. Here is our primary shakeout. You could even, on the 6 hour here, it actually looks like this was the shakeout. And this was your first, these could be, actually you could look at these as both secondary tests to some degree against the previous lines of resistance from the previous trading range we had seen all the way back here. How similar these two look is very interesting. So one of the main points here I think it's important to go over is that you don't have to be interested in trading to get a lot of value out of understanding trading ranges. It's just a name we use. It's investment ranges is another great way to look at it. There are so many different types of interest in this market, from pure total speculator to long-term venture capital investor to intermediary try to get rich quick coin pumper. Because there are so many different types of people in this ecosystem, you want to address who you are and what your interests and your goals are in a market. This type of trading analysis is helpful for anyone, no matter the style of portfolio or the size. The focus here is confidence within the market structure, so we know when to be in, when to be out, and when to go surfing. And that last part, the when to go surfing, is oh so valuable. I don't know about you, but I like to enjoy my life with my capital gains, or my adventure capital gains, I guess. So we had our primary support, our buying climax, our first shakeout, and it looks like we've had 2 secondary tests. Bitcoin is now currently sitting on our point of control, or a POC, which is known for short, not AOC, but a POC. And right now we're building more and more volume above this. We may even bounce back to 49,000. Something tells me, though, we're going to get a pretty deep shakeout, a finalized kind of spring version, something here, maybe into the beginning of March. There's a lot of potential fear on the streets for inflation, and we're running up against one of the most deflationary things in human history, which is technology. It's been that way for quite some time, but information technology is drastically increasing the speed at which that deflation takes place. And we may actually be witnessing, to some degree or another, both the inflation and deflation of an ecosystem at the same time. Almost like 2 waves breaking into one another, I think is what Cathie Wood said. And I agree with this sentiment. They are very, very strong forces that are colliding right now. And you have enormous amount of sell or buy pressure coming in from, we're printing $1 trillion. We're just going to pump it into the ecosystem. Everybody gets a $1,200 check. This is going to create a lot of velocity, especially as the pandemic starts to fade in people's minds. Summer starts to show back up. Vitamin D levels start to rise. The case rate, infections, all those things start to decrease. Everybody gets super excited. But just before that, I think people are going to get uber scared, like let's say March 9th now for fun, for this spring day. Now, it could come earlier, and we may not even get a lower point. Something in my gut just tells me we get a quick dip down to like 39,000 for a spring before continuing much higher through our trading range. Maybe even it makes like this nice kind of head and shoulder patterns, and all the YouTubers are like, oh my God, it's a head and shoulder pattern. That seems likely to me. Here's a nice shoulder. We'd see a head into the spring, maybe even as low as 37, something like this, and then kaboom, outside of the box. So again, even though you may not be a trader, you may be simply interested in investing or venture capital, this is really a powerful source of information to add confidence to where, why, and when you want to be in the market or not. Currently, I'm still in the market. I even bought more Bitcoin the other day. I think I got a price around 45 grand, something like this, which is great. Caught one of these nice little wicks down pretty much. just happened to be well timed, on no fault of my own, really. As we move forward, though, especially after this trading range completes, I believe we're headed towards the end of the bull market. We can officially say, ladies and gentlemen, we are 10/16 the way through the bull market today. It's official. Tell CoinDesk, let Cointelegraph know. We are 10/16 the way through the bull market, ladies and gentlemen. Mark it on your calendars. This thing, when it's over, it's going to come down hard and super fucking fast. This entire ecosystem is super inflated. There is a huge bubble taking place here. Now, the speculative bubble is important. There's nothing wrong with it. But the reevaluation after we break past the mean here is probably going to drop us back down to where we are today. So I think we're going to run up to like 200,000. Maybe we go to a little. Maybe we go lower. Let's say between 150 to $250,000. We get some crazy blow off top, and then we come smashing back down into these $30,000 to $40,000 regions again, somewhere between 2023, 2024, and then we spend a much longer reaccumulation period. So understanding where we are in the market cycle is uber useful, because it allowed you to make lots of entries here, and everywhere pretty much between the pandemic and the finalization of the trading range around November, or what was the SOS, I guess, at that point. This has all been gravy for everyone that was already in the bear family. A lot of you sadly joined after the bull market has started because, like a good new retail investor, for some reason you think a higher price is sexier. And we know why that is because most people look for a partner who's on the up and up, not dragging around, smashing on the bottom. Oh, it's a scam. They're scammers. But that's what will make you a good investor. So keep that in mind. This next wave up that I think we see, first off, I've gone over how I think this is very relevant and relative to the 2017 20 to 30 or 30 to 40% retracement gaps we got on either side here. You can see the almost clear fractal nature of both of these. I thought we might get a little bit higher into an automatic rally of 53,000. We still might, because we are closing above a spring like this. A break below the creek, and then just fucking madness outwards, etc. But once this next cycle starts, oh my God, it goes so fast. We could be talking about, let's see, give us another 30 days. You got a 30 days afterwards, March, April, May, June, July. By August, the market could be over. The market cycle could be over by August to December of this year. So keep that in mind. That's not that far away. It's super close. So we're going to be watching really, really closely here. Back to Ethereum next. Again, we had a nice automatic rally after our primary shakeout. We broke above the resistance line. I have been talking about how I'm not a big fan of the fact that this weakness here into the trading range is significantly higher than the previous buying climax and shakeout. Whereas in Bitcoin, this is actually a shorter buying. This drop here is shorter than this one. And that's what we're looking for. We're looking for less volatility for strength, not more volatility for strength. And this is the first time Ethereum actually showed more volatility to the downside than it has to the upside. In all of our previous trading ranges, the volatility to the downside has been less than that of the upside. And here it was pretty much equivalent to the upside. Again, pretty much right to our buying climax here at around 1370 effectively. So still healthy because we did come back to the top of the buying climax, but just a little bit concerning because you have things like Avalanche and Cardano that are probably a little bit better at what Ethereum is doing. I think Avalanche specifically, that's a different conversation. I think that ultimately these are, like, a lot of these are going to have value. Even if Ethereum's only value is to have CryptoKitties and CryptoPunks on it, that's probably enough to keep it afloat. I'm not making a prediction. I'm just kind of making conjecture. So this kind of degradation in Ethereum was not as exciting. I was hoping we'd get a direct bounce with no closes below the $1,400 mark. Tomorrow we're going to be doing a live Bear Forge with Baloo, one of our internal analysts for the private bear group, and we're going to be going over something I think is quite fun. It's always good to keep your sentiments in check and change them if there is ever new data presented. And we are seeing a little bit of this new data presented lately, I think. And there's a good reason to pay attention to the relationship to Bitcoin and the downside. So we'll be going over that tomorrow. But for now, Every single one of these charts has done pretty much perfectly in terms of the trading ranges up to date. So I don't suspect we're going to get a breakdown here, but we could get a drop as low as $1,200 on Ethereum, just to, again, scare the absolute out of people before we continue. How much higher? I'm not feeling as bullish about Ethereum anymore, but again, I'm not going to bet against the bull market. I'm just less confident. So that means when the bull market's over, my assessment of how much goes back into Bitcoin is kind of it will increase. Maybe I don't want to hold on to any Ethereum after this bull cycle. We're going to find out once we get closer to the end. But again, we are now 10/16 the way through the bull cycle, in my opinion. And for those of you who are asking, well, Tio, why would you say 10/16? What a random number. Well, that is exactly why I picked it, is because it's a random number, and I actually don't know exactly where we are in the bull market. So I'm being ridiculous and kind of facetious by making a subtle joke. When the bull market's over, we'll know, because distribution will have taken place at a large scale and we will not close back above those trading ranges. And that could happen at any day. It could happen tomorrow. So me saying 10/16 is just kind of me poking fun at myself by saying something very, very specific that's also quite nonsensical. So it's a joke. Link had a nice bounce off of its previous resistance line of its buying climax as well. Dipped quite low. Again, the worrying part here is how much price spread you got to how limited the supply coming into the market was. Not my favorite thing to see. Again, we've gone over some reasons why we think that is. Just in general, a large amount of retail out here in these markets, and it increases the volatility because of that. You often have people that are dealing with more money than they've ever had in their life before and get scared in both directions, or excited, I guess, in both directions. So Link, we saw a nice quick bounce. And we've stayed really strong above that trading range too. With the Heiken Ashi here, you can see it's only wicks pretty much below it. Extremely important as well. Avalanche had a nice little turnaround and has gone back to the POC, which is healthy. We'll go over tomorrow on the Bear Forge some kind of unique things I had not noticed before. I think that will help in the relationship of understanding the downside, because there seems to be a relationship, as I've gone over, which is let's take profits back into Bitcoin. Here, my interest in Avalanche has increased again, not just because of my previous secondary investment, but because I'm starting to think that it could do what Ethereum's tried to set on its roadmap 2 years from now, and it's already capable of doing that. Sounds like a better car, but I don't know. What do I know? So I'm keeping a close eye on Avalanche. Really important here. M-Stable was another play I was a little late on. Tech team told me a while back, but I made my initial entries around here at $3. So on stuff like this, it's very clear to see we're coming pretty much back to the top of the trading range for the SOS. First off, though, I like that there's this massive sign of strength, even if it's a full retracement to the LPS range. It doesn't concern me. These are venture capital plays for me. Everything I've got in there, you could throw it in the garbage can, light it on fire, and I'd be like, okay, try again tomorrow. So with venture capital, remember, I'm okay with whatever kind of fire dump garbage pail I burn that money in. I think it's good. It's a good bet. But that's my personal opinion. None of this is financial advice, ladies and gentlemen. Please remember that. Our goal here is to help empower you through education to make your own respectable, responsible decisions for what you should be doing with your own portfolio so you can become more successful based off what you thought was best for you. That makes sense, right? That's a lot of you involved in this, but I show up every day. The second part of today's episode is the community question moment. We'll kind of dive over and go over a bunch of your guys' thoughts. Oh, I should probably look at Cardano before some Cardano person who goes, oh my God, you didn't look at Cardano. It's like one of the top most important coins. Yeah, well, so is Binance, apparently. Evaluation means nothing. We should know that by now. Although it has had some nice price movements. It's dropped back from that 145 mark. It was above our trading range, though, clearly. The primary breakout of this trading range happened really quickly. nice backup and a big SOS already. So this was great. I feel very confident about this. There's a very beautiful trading range back here around 34 cents. It just goes to show the power of the trading range. If you are even late to the bull market, looking for these reaccumulation ranges are extremely valuable. Here they were getting much shorter. We'll probably return to the mean here at around $1.10, maybe even dip a little lower into the dollar mark. I do not suspect the bull market is over, though, so I do not suspect that Cardano's movements are over, though, either. And Bill Schofer says Avalanche is like a Ferrari that's starting at the gate. Actually, it had nothing to do with Avalanche. It had to do with the Pangolin exchange and the way it was moving data. You can go and do the homework on yourself for that one. I really don't care to go through a lengthy process of tech talk with someone who doesn't understand the difference between a car and technology. But it's a communication error, the same way you can have 50 megabit a second internet from Starlink, and then sometimes there's a little bit of a cloud. You're like, oh, couldn't have foreseen the clouds there, so we've lost a few megabit per second. Here's a patch to update that. Things you could never really test, but out in the real world anyway. So I totally disagree with, but I do also agree that it did kind of fumble. They did kind of the Pangolin exchange data relationship with Avalanche was definitely a fumble there for sure, but I don't think it is in any way like blowing the engine for them. It did not fail at what it was supposed to do. It just found something very unique consequence of that data transfer between these exchanges that you couldn't have gotten out in like theoretical testing. Effectively, you're only going to find it in the wild. There's a patch. Bing, bang, boom. Fucking Ethereum rolled back its goddamn chain within like days of it starting because they wrote such a poor fucking DAO that it got hacked instantaneously, and people still love that shit. So I don't know. Ethereum is definitely like a car that failed right out the gate too. They rolled it back, did the work, like whatever. That's just a par for the course out here. Interesting to see Theta have some nice energy, though. We had gone over the previous trading ranges here. I guess seen some nice growth outside of that trading range. 78% since the last time we looked at it. That's fantastic. Congratulations to everyone who's playing Theta. Again, I've said this multiple times. I didn't take entries back in this previous trading range at around 69 cents, but those of you that did, I'm super proud of you. There is very obviously a clear trading range here, and I know a bunch of you guys took this one, so congrats on using your own insight. And that's why, again, I don't suggest anyone does what I do. I suggest you use the information that we are all learning together and pivot it to your advantage to focus on what you're interested in, because you will find shit I'm not interested in. And if it interests you and you don't invest it because you listen to someone else like me, that's your fucking fault. You should only listen to yourself. I only listen to myself. There's only one other person on the entire goddamn internet that I listen to about market analysis, and that's Kathy Wood. The other person I have to read, because Michael J. Burry doesn't make fucking videos that often, so I have to read his goddamn tweets instead. Anyways. Okay, so just a few thoughts here on your guys' questions. Someone still asking about F2 pool. I'm so stupid. Guys, that's what miners literally do. They make Bitcoin, they sell it. Fucking point in case. It's super simple. You don't need to ask questions like, why would they be dumping? What's the reason? The reason is because that's their goddamn product. They mine Bitcoin so they can fucking sell it. How is that hard for people to understand? Silly shit. Rai V says, it would be interesting to see which platforms become stabilized and rule the markets in the tech space in the end. Well, yeah, we have tons of time. We are in the early stages of all this stuff, so there's no reason to think that we know who the winners are going to be yet in some of the other DeFi sectors. Now, Bitcoin, on the other hand, has clearly given us some strong signals that it is the winner in our collateral layer sector. It's working perfectly as a tractor so far. It had some fuck-ups in its earlier days too, might I add. Just go do your homework. It has broken before. They just fixed it before anyone could take advantage of it. But it was broken technically. So next thing. Cool. I'm going to leave it at that. Thank you guys all for joining us today. This Tea with the Arcane Bear. Give us a thumbs up if you like this content. Remember to subscribe. We'll be doing a live show every day for the rest of the year. Personal goal of mine. Probably bring us right to the end of the bull market too, which will be great. And then during the bear market, we make sexier videos usually. That's another story. You can go back and take a look at our history. Videos about DMT and ayahuasca, and rounded bottoms when we're not charting. Thank you guys all for joining us today. I really appreciate all the support. It means the world to me. I've gotten to meet so many amazing people in the Bear family and part of this community. I'm deeply, I'm in karmic debt to all of you. So I will continue to show up and do my best to learn and share what I'm learning through that process, so that hopefully any of you that are learning, and which are all of us that are learning, can help each other not make the same mistakes over and over again, and think about things a little bit differently every now and then, instead of just the same plain old Jane Bitcoin pump, Bitcoin dump mentality. Stay with the Arcane Bear. We'll see you guys on the next episode.